Welcome to another stage analysis video. It's Sunday the 5th of January 2025. As always, lots to get through on the weekend video, but going to start off with a look through some of the weekend's watch list stocks, beginning with ARM, so ARM Holdings. Semiconductors, if we quickly flick through to the group, is one of the improving group themes of the last few weeks. So you can see the semiconductors group chart here, which is actually in what we call stage 4 minus, so it broke down into stage 4 a little while ago, breaking through multiple pivots, but since been consolidating and is now back above the 10-week moving average, the 50-day moving average. And you can see if we go down onto the breadth charts for the group here, you've got what we call the stage analysis technical attribute scores of 6 or higher. So we have, with each stock, they get a rating from 0 to 10 based on their technical attributes with the stage analysis method. So 6 and above is what we call a technically healthy score. So this measures all of the stocks that are on a score of 6 or higher in the group, which has moved up to, I think it's at 41-42% at the moment. But you can see there's been a breakout from the multi-month range here, going back to August here when it made a short-term low. So breaking out in the near term in terms of the breadth, i.e. more stocks are technically healthy than they have been within the last 5 or 6 months or so. And the percentage of stocks above their 30-week moving average in the semiconductors as well is now broken out and back above the 50% level and approaching the 60% level here. So again, coming out of a multi-month base that went back all the way to August time. If we look at the top 10 stocks here, so ARM itself doesn't have a stage analysis technical attribute score yet, as it takes a year and a half from when it initially starts trading for the score to be developed, as it has a range of long, medium and short-term measures. So until the long-term measures are in there, we don't give it a score. But this is based on the market caps here, so you can see that these are the top 10 in terms of the largest stocks in the semiconductors group, ARM being one of them here. So it's a bit of a mixed bag in terms of the big 10. So we can actually see a version of that chart if we change the up here, actually add big 10, a little bit of a shortcut with that one. You can see the top 10 stocks are in a better position here. They're actually in what we call stage 2B, so at the moment. So coming back, let's come back to ARM itself. So on the daily chart here, you can see we recently had what we call a failed stage 4 breakdown attempt. So quickly go to the weekly chart, you'll be able to see that a little bit more clearly. So it attempted to break down into stage 4 here. The 30-week moving average was starting to roll over, and it's kind of a little spring and a reversal back into the range again and back through the 200-day and the 50-day moving average on Friday. You can see if we look at this chart here, there's a little bit of what we call a double bottom pattern. So you've got the undercut on the right side of the pattern. So you generally want to look for that on a double bottom, and then the top of that pivot would be through this area here. So at the moment, the top of the double bottom pattern is just above that 150 area in this 151.91, so 152 kind of area. But we've also got the 13-week weekly close up here, which would be the position for it to move back towards stage 2 again, so 153.03 at the moment with that. So if it does actually follow through here, we see some strong movement. Then if it did start to move back through this area here, this 150 to 160 range, then potentially could move back into stage 2 at that point. However, if it does start to roll back through the 50-day and especially the 200-day here, then potentially could turn back to the short side here, and then moving through the 125, 120 area could potentially put it back into stage 4 again. So a pivotal point for this at the moment is, again, if we go back to the weekly chart here, it's in the middle of stage 3 currently. So starting to move into stage 3 with this big significant bar here, broke down, failed, quick move down, which then reversed back up and has been going sideways for a while now. So it's in a stage 3 structure at the moment. As I said, break back to above through this 150, 160 area, potentially would put it back into stage 2 again, but a break to the downside here would actually knock it to stage 4. So it's in a crossroads at the moment and could easily go either way, but Friday's significant bar is a potential positive here. So as I said, if it can hold the 200-day and the 50-day moving average on any kind of pullback through here, then this could be potential for a new attempt to push back out into stage 2 again. The mental relative strength just breaking back above the 0 line again at the moment. Moving on to GEV. So this is in the strongest group at the moment, the independent power producers. So we just quickly go into that on the just show you on the sub-industries chart here. So the independent power producers and energy traders group, again being a younger stock, it doesn't have a SATA score yet, so just shows up at the bottom of the table here. But if we click into the group itself, you can see there's been an exceptional mover over the last year or so. One of the strongest group themes of the last year, and the group as a whole is pushing just back towards the top of the range again, with 70% of the stocks in the group that are technically healthy and over 70% above their 30-week moving average. You can see from the SATA scores up in here. So coming back to the actual daily chart with this one, this has got the full history of this chart on it actually, because it's only quite a young stock. I think we got 11 months old on this one. No, 9 months 20 days. So chart, so just under 10 months on this one. So this here, initial IPO base breakout, moved up into stage 2 and then went sideways for a while, made a continuation breakout through this area, a back up, followed through for a strong move, and again we've been going sideways for a little while here. So it's been in stage 2 since back at this point here in late April. So at the moment making what we call a stage 2 continuation breakout. So in a strong position potentially at the moment, looking for this to follow through and continue on to the highs. But if it does make a failed breakout attempt, this could turn into what we call a UTAD, an up thrust after distribution, and at that point it's the opposite of a spring, and generally you get a sharp move to the downside. We could see this start to roll over and start to turn negative at that point. But at the moment, significant bar on Friday, so looking for some follow through for it to start pushing its way higher in stage 2 still. Square, so this has come up in the watch list multiple times in the last 3 or 4 months or so, as it started to move out into stage 2 initially through this area. The earnings reaction was initially negatively received, but you can see the reversal, heavy volume from the 200-day moving average. So touched that of a squat and a tail off of the 200-day moving average and closed only a tiny bit down on the day. So that was the significant day as such, the significant bar, and then followed through the next day with a significant bar again on heavy volume, breaking out of the longer term range here. If we go to a broader weekly chart of this on the website here, so you can see in its group data processing and outsourced services, it's number 4 in the group at the moment, which is a healthy group currently. So come back to the chart here. If we look at the broader range, you can see from this point here to this point here, you can draw your structure across. So started to move out of the structure and then has just had a back up this week and reversal back through the 10-day moving average. So this is your sign of strength. Those that do Wyckoff, this is your sign of strength area, and this is the potential back up at the moment. So looking for this to continue pushing out from the range here. Go on to our trading view quickly, get a broader look at this, and let me get the monthly chart up. So on a 1 month basis, just attempting to move into stage 2 on a 1 month basis here. Turn off the stage analysis indicator here. You can see that more clearly there. So here's that structure I just highlighted through there. So just moving above the 40-month moving average at the moment and approaching multi-year highs here. So this had obviously an exceptional move from 2016 to 2021. It's looking for obviously it to continue. Back to the weekly here, you can see that structure a little bit more clearly. So is that broader range. So looking for it to start to push up into the high 100 areas here. So come back out of here. On the daily chart, you can see just breaking above a little double bottom pattern here, so it's had a good initial up thrust move through here since the reversal. Put a little, actually, let's have a look at the Fibonacci level on that. So since the reversal point there, so it's had a almost 50% pullback and then reversed higher from this point here. So short-term uptrend is intact at the moment. Got a little double bottom pattern again. Again, the important thing with double bottom type patterns is for the right side undercut. So you get that spring type action through there and then through the pivot. So just through that level at the moment. This is the local significant bar low, major resistance in the near term, which is still within. So looking for it to push up towards the top of that range and potentially start to push out higher again. But if it can't get back above the top of this range, then that would be a negative for this one. But in the near term, get the 3 ATR levels on it. The 1 ATR level is just at 93.39 at the moment. Actually get a broader look at that, which is this level through here. So again, getting close to the top of that bar there, and that's the potential area where the short-term uptrend would resume at that point. Okay.